Today in crypto, Bitcoin faces another brutal rejection around $10,000. The stock markets are once again to blame, with a big dip in the equity markets dragging Bitcoin right down along with it. A Russian ministry is fighting back against the proposed cryptocurrency restrictions in the Federation. Coinbase pumps are still in full effect, and the US Fed keeps on reminding us why we need Bitcoin with a brazen $500 billion theft and trillions more in money printing on the table. The cryptolark, this week, subscribe for all of the hottest and all of the latest happening out here in the wild, wild land of crypto. So yes, let's start by talking about the price of Bitcoin today. Today, the stock markets took a big dive. All of the major indexes are down. The S&P 500 dipped by around 7%. And yes, of course, Bitcoin took a brutal nosedive of 9%, proving once again that Bitcoin is dangerously correlated to the vitality of the equity markets. The VIX, or otherwise known as the Wall Street Fear Index, just surged by a whopping 50%. It's amazing. Greed switches to fear in an instant. It's astonishing to see this happening in the markets. Now, we had a big move on the Bitcoin Fear and Greed Index as well, dropping 15 points, bringing us back down towards 38. Will we get a sweet, sweet dip to buy here in the near future? One can always hope anyway, but oh man. $10,000. What a tough nut to crack. We have had 6 very strong rejections right around $10,000 in the last month. And look, either way you cut it, whether you are in the symmetrical triangle or the ascending triangle camp, they're both broken. 2 daily candles under the line of support right now. The second one, of course, is not confirmed. Maybe we will get a reversal. Maybe this is just a bear trap. Maybe we'll get that second daily candle confirming back within those patterns. But look, if it actually does hold and we do stay underneath those lines, then $8,200 around the 200-day moving average, that becomes our key line in the sand. This must hold for us to maintain our larger bullish bias on the market. If we do see a retrace to that level, then it could represent a fantastic buying opportunity. Historically, buying on retests of the 200-day moving average have been a good move. By the way, the S&P 500, it just broke under the 200-day moving average, meaning that the equity markets have just flipped into bearish mode again. The worrying correlation between the equity markets and Bitcoin, that could spell short-term trouble for the price of Bitcoin if we see further corrections in the equity markets. But for perspective here, this recent price move for Bitcoin, really not that alarming. We're still basically just ranging in that channel that we've been watching here. We're just kind of stuck in this price limbo still, even with this big move. So until we get some truly convincing move in either direction, either we break below $8,200, which really switch the bear mode on, or we crack over $10,500, which would put the bulls in full force of the market. Until then, we're chilling. A big thank you to Crypto.com for sponsoring today's episode. A reminder that Crypto.com is selling $2 million worth of Bitcoin for a 50% discount on June 30th, and you can participate without needing to stake CRO tokens. The next Syndicate Lite event has been announced. On June 23rd, they're going to be selling $250,000 worth of Engine tokens for a 25% discount. For this one, though, you will need CRO tokens staked to be able to participate. And just a bit of fun, too, by the way, Crypto.com now has their own Twitter emoji for the CRO token. Cool, man. Cool. And a reminder, of course, too, that the ever-popular Crypto.com debit card is now shipping to the USA, the UK, the EU, Australia, and New Zealand, and that Canadians can now reserve their cards for shipping soon. So you can enjoy 2% crypto back and free Spotify for the Ruby Red Tier card, and 3% cash back, free Spotify, free Netflix, airport lounge access, and premium lending rates with the Jade Green card here, which is the one that I have, of course, in my hand. And as a special bonus, if you reserve a Ruby Red tier card or higher, using the link down below in the description, then you will receive a $50 bonus in free crypto. Okay, now on to our first story of the day. The Russian Ministry of Economic Development has sent a letter to the parliament criticizing the proposed bill that is currently sitting there that seeks to impose very, very tough restrictions on the cryptocurrency industry in Russia. They argue that this bill, if passed, will simply scare innovation and scare business away from Russia, resulting in a big lost economic opportunity, and that these laws, if passed, will do little more than to create a big, unregulated, unmanageable black market for crypto. And you know what? They are 100% right. Just look at China, man. All the restrictions that China did, all it did, the big effect of that, they created a massive black market that is now bigger than the white market that used to exist. This is good to see them actually dissenting here, because we already have seen the industry fighting back against this proposed bill. But to see the support of crypto liberalization by a ministry, that has a lot of impact. That takes this conversation to a serious level. The battle between the anti-liberalization forces at the central bank and the pro-crypto segments of the Russian government and the ministries, it is continuing. This is a battle that's been going on for like 2 years now. The Russia story, it is far from finished. Until we get some laws signed in, it's all up in the air. Next up, it seems that the Coinbase Pump is well and truly back. Simply by saying that Coinbase is looking at listing something. Not that they're actually going to be listing it, but it is something under their vague consideration, has caused a big pump. So a new range of cryptos has been announced that they're looking at, and the impact was immediate. Most of these assets went up between 8 and 25%. The average was around 17% of a pump for all these cryptos that went up. You can see a full potential list of what might be listed on Coinbase here. But there's a lot of great DeFi projects there, which is nice to see. Anyway, I really wanted to highlight this story because it seems that the Coinbase pump, it is well and truly back into effect. And look at this, just the news that Coinbase is considering listing some cryptos, maybe. Not that they're going to be doing it. That is enough to pump these coins hard. And we have seen, of course, recent listings like OMG and Maker prove that an actual listing announcement is enough to double a coin or more in a very, very short amount of time. Meaning that there is an insane amount of interest right now in altcoins, and that interest, that paradigm of altcoins are going to make you a lot of money, is starting to swing back around. Anyway, finally for today, the big catalyst for the market drop today, aside from people simply coming to their senses and stopping buying the top of bankrupt companies, is that the Federal Reserve held a meeting where they announced that no interest rate hikes are expected until 2022 at the soonest. This announcement immediately dumped the markets. Low rates could at least have the silver lining, of course, of investors trying to seek out alternative investments that are going to give them some good returns outside of the bond markets. So that could be gold, that could be Bitcoin, that of course could be buying the dips on the stock market as well. All this becomes an attractive scenario, but particularly things like gold and Bitcoin. In fact, gold went up on this announcement. Unfortunately, Bitcoin went down on this announcement with its link to the equity markets becoming dangerously correlated. Now, do you remember all those stories about Grayscale's buying big into Bitcoin? That a third of institutions, they're getting into crypto. Paul Tudor Jones, he is playing with Bitcoin futures. And record volumes for the CME and for Backed. Well, here is the result. This is what happens when more institutional investors get into crypto. We increase our correlation with the equity markets. It is what it is, guys. It's a double-edged sword. They're bringing their money. They're also bringing their problems. And things could get real bad when Q2 earnings reports come out in July, which is probably going to be incredibly savage. Also, a damning report by the OECD has cast major doubt on a so-called V-shaped recovery for economies. They argued that governments should instead prepare for a second wave of the coronavirus, meaning that 2020 will likely have some big surprises in store for us still, so stay frosty out there, everyone. Ensure that you've got enough cash set aside to ride out any prolonged irrationality in the markets, because while investors may flock into Bitcoin, they may flock into gold as the equity markets start getting slammed by round 2 of the Mexican beer crisis, there also stands a good chance that Bitcoin and the crypto markets overall could get crushed right alongside the equity markets if we do see some really big turbulence coming into that. And of course, having enough cash on hand will mean that you do not need to sell your Bitcoin if the going gets tough, and that you can buy the dips if they happen, and of course be able to dollar cost average into lower prices, thus increasing your stack for that long-term game, which I'm still incredibly bullish on. Now, all this may not happen. The Fed might come in and print enough money to save everything, but always prepare for the worst and hope for the best. We still have a lot of macro factors working in the favor of Bitcoin, and we could just as easily see those investors flocking into Bitcoin in a time of economic uncertainty, thus breaking our correlation with the equity markets. Also, I have to share this story with you. Treasury Secretary Steve Mnuchin, he is refusing to disclose the names of the businesses getting $500 billion in bailout funds, claiming that the information is confidential. Can you imagine that? $500 billion just gone. No oversight, no transparency. It's wild. The implication here is that a lot of that money was given over to insider crony deals and ended up, of course, in Cayman Island bank accounts and given over to shell companies and all this dirty, dirty stuff that these guys play. These dudes and their buddies, right now, they are looting the U.S. Treasury. It's disgusting. The government is selectively choosing which private companies will get bailed out, and they won't even tell you who they are. These guys, they're making billions and billions of dollars off of this crisis. Meanwhile, the taxpayer is footing the bill. This is the worst of corporate socialism. But all is not lost. Protesters in Lebanon, they have figured out who the real crooks are here. So here is a video of them burning down a central bank branch in Tripoli. Oh man, that's nice work there, guys. Nice work there. Anyway, doesn't really help the US, but just thought I'd share that with you. Anyway, the story doesn't end there. Mnuchin has said that more money will need to be spent as, of course, fears of a second wave of the pandemic and thus prolonged economic uncertainty are starting to pick up. While this would likely include a second round of stimulus checks for regular people, it will almost certainly contain an absurd amount of free money for the banks, for the corporations, for the oligarchs, for the insiders, for friends, for families, for neighbors, of the elites. Not you, but, of the elite class. They have not released an amount yet of how much that is going to be, but if round 1 is anything to go by, then we could see another $6 to $10 trillion laid on the table. Maybe 5 to 10% of that goes towards helping regular people. The lion's share, it goes towards the kleptocracy. Now, where does this money come from, you might wonder? Well, they just tap some numbers into the computer, and bingo! More money! It's magical! Just like that, they create money. Of course, all of this debases the dollar, and it increases the US debt and will impoverish and enslave an entire generation to an unpayable debt burden. Cool and normal, man. But who cares about that? By the way, the US national debt clock just hit $26 trillion. Trillion with a capital T, man. The last landmark of $25 trillion, by the way, happened only 5 weeks ago. 5 weeks ago, $1 trillion in new debt in 5 frickin' weeks. Come on, America, what are you doing, man? That's crazy. Understand there is no way that this debt gets paid, and that debt is being added right now at a rate around $1 trillion a month. That's insanity. A lot of people assume that there's some really serious people who know what they're doing. Managing the economy, running the ship in Washington, running Wall Street. Oh, no. Look, this clip here from Robin Williams talking about the aftermath of the 2008 financial collapse, it's a great clip, and it really sums up the reality of what is going on.
About being like a group of junkies who've relapsed, going, listen, man, I just need some liquidity, you know what I'm saying? I just ran into some bad subprime, you know? We just had complex formulas. We just didn't factor in greed and panic, you know? I just need $805 billion by Tuesday. Yeah, no, seriously. No, I would not screw you again. It's pretty crazy.
I've learned my lesson.
No, baby, this is not like the other time. No, seriously, I just throw me a bad here, baby.
Just give me,
help me out.
Just give me a little bit.
Yeah, just a taste. That's all I need is a taste. I need $2.5 trillion. I'll pay you back.
Get me through 1 week.
Yeah, it's like they're going to print out a new $20 bill. The new Geithner $20 bill will be, instead of "In God We Trust," it'll just say "Trust me," and it'll be the little man from Monopoly going like this.
Oh, Robin, man, you left us too soon, buddy. Anyway, big picture here, everyone. All the stars are aligning for Bitcoin. The money printing, the corruption, the bailouts, the corporate welfare, the rates, the system as a whole. It's just rotten and broken. This is one of the biggest reasons that keep me buying and keep me holding Bitcoin. Market up, market down, I stack sats. It feels good. Anyway, your question for today. Do you think that the economy is going to get better or that it is going to get worse coming into the Northern Hemisphere summer? And if so, how do you think that this is going to affect Bitcoin in the short term? As always, love reading your thoughts down below in the comments section. I read them all, so definitely drop me your opinions down there. Love to read them. Hope you're having a freaking awesome day. Have a fantastic weekend out there, everyone, as well. And of course, long live the blockchain. And peace out till next time.